The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. My name is Darrell Martin, and I am your host, and I look forward to helping answer any questions you have about trading futures, forex, options, binaries, Nadex spreads, stocks, or anything in between there. So there's not too many things left after that. But if you have any questions, feel free to give me a call right now. You can give me a call live here at TFNN, and don't forget you can also listen to us live each and every day at TFNN.mobi or TFNN.com on the Tiger TV channel right there. You can look at the screen. And the call-in line is 1-877-927-6648. Again, that's 1-877-927-6648. Let's check it out. We got the S&P right now. It is up a little over 6.5 points. We have the Russell up 5. NASDAQ is currently down 3 points with the Dow up 74. Oil is currently flat on the day as far as comparison to the previous day's close, their settlement price. We got natural gas up over 1.5%, or over 3% now. So natural gas is up over 3%. Corn is up over 1.5%. So is soybeans. Euro dollar is currently up 33 pips with the Aussie dollar up 53. Pound dollar currently at 58 with U.S. CAD flat on the day. Just up a mere 5 pips. U.S. franc just down 10 pips. Euro yen up a pip. So that's probably one of the smallest moves I've ever seen on the euro yen. Pound yen up 31 pips, U.S. yen down 27. Looking on over, we got gold right now is currently up 21 points on the day. So some nice moves there in the gold market. And we got silver is currently up over 1.5% with copper up over 1% in the metals. So what do we got going on this week? What do we got going on today? Let's check out some market movement and see what we can take advantage of right now. Looking on over at the New York Stock Exchange advanced decline, we can see is the market started up pretty positive, and we're still in positive territory on net shares being up versus down for the day. But we've been trending down a good chunk of the morning, trying to give a lot of that back. And it's pausing right now. We'll see if it keeps it up, but we are still in that downtrend mode on basically the major indices there. So just looking at that simple thing. So if we violate that trend line, then we ought to be looking for potentially the market will reverse. And let's go in and look at each one of the indices, check it out, and see where the markets are at and how you might be able to take advantage of this using the deviation levels we talk about that you can get access to as well. So right over here, and let me go ahead and we'll start off with the S&P. And it's looking at the 10-minute deviation stop loss, one of the best things I love to use when trading, because it helps me know when there's a very high probability that the market is done and will be done for the day, is when a deviation level is hit and its stop loss is hit. And what I do is when a market closes above a deviation level and then back below it, 5 ticks below, often that will signal a reversal, a pullback, or choppiness in the market going forward. Now, that reality is very high when we hit a 1 deviation level. We haven't really hit a full deviation level for the day from settlement, but have we hit it from the low to the high? So how do we find that out? Well, what we do is we go over here, and I don't think we've quite hit it today, but we can just measure, take a simple ruler, instrument like on a chart, and measure from 0 to 1. Or you look on the deviation page and see it's about 15 points. And then we go over here, we go from low all the way up to the high. And we got about 13. So almost a deviation, not quite a full deviation yet. Once we've hit a deviation, if we hit a trailing stop, then I usually say, you know what, the market's probably cooked, done, and over for the day. We haven't hit it yet, but we definitely did hit the 10-minute deviation trailing stop. Market turned around right here this morning. And I was talking to some other traders about this morning and looking at several things. And basically, I didn't have a short yet on a couple of the markets, but I had this, what I call a barely missed X trigger, where the market basically, sort of, you call it double top, triple top type thing, where the market basically comes really close to breaking out and making a new high, but doesn't do it. So after it pulls back, it comes back up really, really close. It isn't able to make a new high, and so it's sort of it's almost not a double top. Like, it couldn't make the double top. So there was no more orders up there for it to keep going. And due to that fact, then we basically are expecting the market to turn around at that point. And so we had not only did we have a stop right there, but then it closed, let's see what, at or below, and then above again, so it would have moved the stop a little bit closer over here, and the market turned around on us. So also you can add in RSI divergences and other things that I teach on here. But looking at this, okay, we got this barely missed breakout here happening over on the S&P. If we go over, we look at the Dow, we got the exact same thing on the Dow. All right, so the Dow, again, it comes up, it pulls back, it tries to go up here and break out, gets within just a few ticks, it's not able to break out. So we also get the barely missed breakout over here, and then we go on into the S&P, not the S&P, but we go over to the NASDAQ, all right? The NASDAQ, I mean, it said, hey, we're going down today. It was the cleanest, prettiest, best thing to trade all morning long. So as far as the indices go, because it was just really, really just a great, smooth chart. And, we got earnings season now, right? So earnings are back, and we have to take advantage of earnings season. So I love earnings season and the volatility that earnings season brings into the market. And so they're going, and we'll be having some nice earnings plays coming up. But we got NASDAQ just heading down all morning long. We have moved to full deviation, by the way, so this is something to be mindful of. We moved a deviation from high to low. Half a deviation up, half a deviation down, high to low. All right, so from here on down to here equals about 30 points or so, which is a one full implied, not standard, not historical deviation, not pivot point based on some magic formula, but just pulling the implied volatility out of the market. We basically exceeded a full deviation move by just a little bit just now. So that's an important point. A full deviation move, that's a 70% of expected move on the bell curve in a day. And what does that mean to you? Well, that means this could easily be a hesitation point. Not only are we at the negative half deviation mark right now on the NASDAQ, but we're also at a full deviation move from high to low. So this is easily a pivot point. It's a point of exhaustion after running up and coming all the way back down. And we should expect the markets to chill out for a little while. And be careful on just adding into shorts right now. So I'd really slow down on adding into short position on indices at the moment. Also, we're sort of seeing this right over here. If we look over at the advanced decline on the NYSE, I mean, check this out right here. And we do have this. We still have a nice little downtrend going on. But, I mean, notice how it's sort of taking its time now. Since about noon, right? We have about a 1 hour where we've just done nothing. We haven't, yeah, we're trending down, okay, but we haven't really done anything. We're not making new lows. Shares aren't really pushing to make new lows on the net shares on the New York Stock Exchange. So, I'm just saying use a little caution. You want to know when to turn that caution meter on. And this is a good point to do that. Add a half deviation mark on a full deviation move on the NASDAQ. And net shares not really showing a lot of net negative activity. And let's go ahead. Let's look at the Russell along with everything else. Got the small cap stocks going on. And it went down half and went up and then back down and back up. It's just really been choppy. So out of all of the indices, it's probably been the choppiest indice of all. This morning, NASDAQ being the perfect indice to trade this morning. And when I see this, when I see chop on one, I see, barely missed breakouts happening on two other indices. I see a definite short on another one. I'm probably not trading the one that's choppy, right? I want to trade the cleanest one I can, and even though obviously you don't obviously know it's always choppy until the chops happen half the time, what you can tell is this one's trending, this one's not. I mean, that's not really rocket science to figure out that that's not a trend. I mean, it's just going sideways. So, and the other two are having a hard time breaking out to make new highs. So that gives all of them a negative bias. But anyway, so, definitely keep, trail your stops, keep them tight, and follow your plan all the way down there. So that takes up the indices for us. Let's go over and let's look at our metals this morning. So what do we get over on gold? Because gold, we had a nice little move this morning. Pull that on up and move it on over. And let's look at low to high. So we want to really be using that low to high. We want to be measuring that, okay? So we got, settlement over here. And a deviation move is about 23 points. And then if we go from low to high over here, about 23 points. So we've moved about a full deviation from our low to our high. So that also means that's a point of very high potential exhaustion in gold. And that doesn't mean we can't take new trades, but it means we wouldn't be surprised if the market didn't do anything after this point. I don't have just this big expectation of like running trend. So we had the trend. It happened. It's done. Will it continue? Maybe. Are my probabilities as high? No, there's about 30% probability the trend will keep going. Okay? Now, that doesn't mean there's 30% it'll trend the other way. I'm just saying a continued strong trend, there's very low probability. Also, the gold market closes here in like 13 minutes on the floor. So we may get just a last-minute pop on gold. So with that being said, let's check it out. Let's see if there's any trades that might be available. Let me pull up the trades over here. We might see if we can do maybe a premium collection, if there's anything sitting there. I don't know if we're going to have anything or not, but I think it's definitely worth a look to see what might pop up that we can take advantage of. Maybe do a little premium collection trade here in the last 15 minutes before the gold market shuts on down. And give me 1 minute. I'll load the chart up and we'll be on our way. If you have a Nadex account, this would be a good time to log in to your demo and trade along with me right here. And looks like the stocks might be wanting to move back down now. We're starting to get some short on the, by the way, just a heads up for you. We're starting to get some negative movement right there on the advanced decline. I'm seeing a big drop in the shares, the net shares. So this would be the time now to be looking at potentially getting in. Look at that. That's just a massive, one of the big drops we've seen this today. So that is a little heads up that shares are starting to move south right now. Look at that drop. Bam. And I like seeing that if we're going to go short. So that may give us the oomph we need to be able to push on through to the next level and go on down to possibly a negative 0.7 or a negative 1 on the NASDAQ there. Okay, so let's go over here. Let me open this up for you. We'll do a quick scan. And if you have access to diagnostic, box spread scanner, binary scanner, they come together. And you can use that. So just open it up. We're going to go to binaries right now. Click on the binary scanner. And I'll choose my live account. I'll go in here. I'm going to choose down here under risk. I'll put 70 to 95. That's the settings that I always use. And then less than an hour. Okay? And then I'll select the gold market to see what's available. And so looking at gold, we're going to be looking at potential longs. And we'll talk about that when we get right back. Stay there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And so we're looking at gold. Gold's going to be closing here in the next 6 minutes, okay? And this is an expiration premium collection strategy. There are 21 expirations a day. All right, 21 expirations a day on Nadex. And I mean, they got expirations at night. They got expirations in the middle of the morning. I mean, you're talking about, what, they got like 7 p.m., 11 p.m., 3 a.m., 7 a.m. You know, I'm just talking about binary expirations. Then they got, I think it's like 5, 6, 7, 8, 9, 10, 11, 12, 1, 2, 3, 4, 415. I think there's 130s and 230s and 125s, all that in there. So there's a lot of these expiration premium collection trades in here. And they're pretty cool. You can go in right now. Like, you can buy this contract for right around $80, $75 on here, which means you'd make about $25 on the trade. The big key, and this is the biggest key, okay? The big key on doing these trades is if it hits the strike, if it hits, like, say, 1234, just get out. Really often, what will happen is the trades, they work out great. And but your risk is very high compared to your profit. So to control your risk, all right, very important, to control your risk, you want to exit if what you see is that the market hits the strike. So let's say we go in and we buy the 1234, Okay? If we buy the 1234 and gold gets down to 1234, we want to get out. Because when we're buying that, we're saying that it'll expire greater than 1234. Okay? So it's just not worth the risk on the trade. And what does that mean our risk will be? Well, what this does, it gives you more of a planned risk versus a total, like a max risk, ideally. And by planned risk, what I mean is you go in and you're risking $75 to make 25 because you buy it for, say, $75. But if it goes down and it hits the strike, you're going to be able to get out for somewhere around $50 because there's basically a 50-50 chance it'll still be there at expiration. So it'll be priced right around 50 if it gets down to 1234. So that gives me a $25 profit with a $25 risk so long as I will be disciplined and I will take my stops. Okay? Again, so long as I'll be disciplined and I'll take my stops, it's a great trade. If you're not going to be disciplined, not a wise thing to do. And you can't put a stop loss order in on Nadex. It has to be a limit order because these things are way too volatile to do stops. So what I do is I go in and I have my trade ready. I put it on, okay? And then what I'll do is I'll flip around and I'll put the trade up in the opposite direction. So I'll put, say, a sell, and then maybe I'll put in, like, sell at 45 because it's going to give me an at this price or better, okay? And so let's say it's at 50, it'll fill me, at 50. If it's at 55, it'll fill me at 55. But I just want to have the trade ready, and risk management is more important than anything else on this. So you got to have the pieces put together in order for this to work. If you don't do that, then it really will not work well for you. Okay, so I want to highly again suggest that you have all the pieces right there done and in place, and have your stop loss, risk management put in, like we might get right down there. And if we do, then you get out of the trade. Now, the other warning you always want to be aware of, okay, is in the last 3 minutes of expiration. Okay, again, this is really important. In the last 3 minutes, so like we're in that zone right now. In those last 3 minutes, you can't do anything about the trade. The last, I guess it's 2 minutes to be technical. You can't get out. Now, you could get out potentially if somebody let you get out. Okay, meaning if another trader took your trade, but the market maker probably isn't going to be making any kind of quote on that trade. Okay, so the liquidity is going to sort of dry up in the last 2 to 3 minutes. So if you're worried about it, if you want to be out, the time to be out is before those 3 minutes. And I say 3 because it's really those 2 minutes. You want to be out of the trade by then, because if you're not, you can't do anything about it. So if you're comfortable with the trade, like we see some up volume, up trend, all that stuff happening. I see upticks going on. You stay in, and then right at the end, right there at 1:30, then the trade expires. As long as it's greater than 12:34, then you're profitable on the trade. And it can get a little hairy right at the end of pit close. The market can really bounce around a lot on you. And it'll let you know you're alive. It'll get your heart beating. But they're a lot of fun. I like doing them every day. Check them out, and we'll be back right after this break. I'll let you know the results of that premium collection trade.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. The Art of Timing the Trade charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking everything out, just looking over. And, okay, so gold expired in the money. It expired above our strike of 12.34 there. And it got close right there at the end, but it stayed up and in the money. So as long as it stayed and closed above 12.34 on the settlement price, then you're able to take advantage of that. So you get a full payout right there. And what you can do is you can also go over to Nadex.com, and you can click on results. Let's see, I think, what is it, Nadex.com/results. And it takes them about, now you'll get an email immediately, but .html, and they'll actually show you the settlement prices. So right there they have the one, so we'll have the 130s up here pretty soon, but you can go down to gold, so like gold, it's easier just to search for it. And so they got 1 p.m., get a little bit longer, they'll have the 130s on there, and they'll post them. You get the email right away though, so you would have already got the email, I believe, in your Nadex account. So yeah, my position is settled for this contract. And just to show you, like right here, pay out $500 on the trade. Not bad for, 10 minutes of trading right there. So payout includes, of course, the risk being paid back to you plus the profit made. And so that settlement goes in, that immediately gets credited back to your account, and you're able to use that capital for your next trade right away. And that's how it works. But they'll also post the exact settlement price right here. One thing to show you again on that settlement ticket, let me reopen that. is you can see that it settled at 1234.947. So basically almost at 1235. So we're full 10 ticks, about a full 10 ticks in the money on that expiration. So cool, simple trade. Takes a matter of minutes. You do a few of those a day. Then it's easy to do. You hop in, you put it on, you put the trade on, you manage your risk. Don't do too many. Get out of the trade if it hits your strike. It's one of my favorite trades. So looking at everything on here, trying to see what else do we have that we can take advantage of. Well, that's gold. Just to do a quick review, like I said, we had that one deviation move on gold from low to high, but it was just sort of oscillating right there. I usually don't do butterflies right at expiration. Probably would have worked on here. It's just it's really hard in the last 10 minutes to say it's going to stay in like this 1 point up or down move. I much more would rather pick a direction. Even though, yes, I make more money if it's a butterfly, I lose less if I lose, but I'm more likely to lose by butterflying in those last 15 minutes because the movements are so small. So I just sort of look where is the momentum in the market, and I go with that direction. Let's go ahead. Let's check out silver real quick. See what it's doing right now, where it's sitting on it. And we got to move from low to high. We basically got a deviation move on silver as well from low to high, even though we just hit up at this 0.7 deviation. So to show you that again, just measure like settlement to 1. That shows me that I have a measurement of 0.495 there for a deviation move. And if I go from low to high, then like 0.59. So we're right at a deviation move. Okay? And then I'll put all the different pieces together. Okay, let's see here. Trying to see what else we got going on. Let's check out copper. And I think it's pretty much sort of nice. All the metals are sort of doing the same thing, but I mean this is definitely when you see this kind of flat movement, because that's what happened. I mean on gold, on silver, even on copper, at the end of the day, we got a little spike. But I mean we had a really flat move. When you see like these flat markets, and this is what we expect at a deviation level, we expect a lot of pivoting happening. And again, if I go back over to silver, you'll see this as well. You'll see a lot of pivots going on. It's just that's a perfect place to do butterflies. So this is where I'd want to be focused on butterflies when I just see like this complete flat market. And all right, so with that going on, looks like we got a caller now. We got Richard from New York. Questions about strategies. You there, Richard?
Yes. Hi, Darrell. Thank you for that trade. I got into it just right as you were talking, and it worked out. Could you help me, though, in terms of your strategy of exiting prior to the end of that trading session, like, the 2 or 3 minutes that is closed out? How do you set it up to where you're out or you're not at risk, or do you just let it go?
Basically, like at that 2 or 3 minutes, sort of like the 2 minute final warning, like in football or whatever, right? You get the whistle there. If you get past that point, you're in. There's nothing you can do about it unless another trader takes the other side of your order. Okay. So you can put like the exit. Right, but before that, okay, go ahead.
I realize that, but what do you think is the optimum strategy? Should you get out prior to that, or do how do you usually do your premium corrections? Do you just let it
90%, I'd say 95% of the time I don't get out prior to that. The only time I'll get out prior to that is if before that sort of 2 minute warning, it hits my strike.
Okay.
So on that example, I bought 1634, right? Uh-huh. So I mean not, but let's see here. Well, let me pull it up. We'll go to the exact example. It makes it a lot easier. But on that example, basically, if it comes down, it hits the exact strike I bought, which, let's see, if we go into the order history, pull that up. Okay, 1234. I don't know where 16 came from. so used to gold being so much more valuable than what it is right now. But 1234. So I bought the 1234 contract on that trade. If gold came down to 1234, then I exit. Because here's the thing: is I know the price will be right around $50 if it gets to 1234. And so I can go, okay, if I can make about say $10 or $20 on this trade, then that's awesome. But if I may even make less. I may sometimes I'll call the trade out. Like I called the trade out, I got in like at 87. I know other people got in like at 80 and 75. So you may even got a better fill. But like, I know that if I get out at this point, I can make that money back in a couple trades. If I'll get out at 50. But if it goes like way back down, then I'm going to be like trading a lot to make that money back, right? So I want to be out at 50. Now, if it's within, I'd say, a few ticks of that underlying market, I may just go ahead and take like a $10 or $20 hit and get out and make it back. I'd rather take a $20 hit and then only take one more contract trade to make it back.
How could you hedge yourself? How could you hedge yourself? Suppose you want to let it ride. You were talking about how you would hedge yourself. Like if it spikes in the opposite direction, how could you get back some of your capital if it moves against you?
Well, the one way is obviously you just have to do more trades afterwards, but that's not really hedging. Hedging being at the same time. It's going to be really hard to hedge gold because that's the only contract that expires at 130. I did a trade last week. It was pretty exciting. I went in and I hedged. So to answer your question with this, is I went in and I shorted the Dow. This is on like the 415 expiration. Okay.
Okay.
And I was doing a premium collection, so I was selling saying, hey, it's going to expire below this price, and it was semi-close. I got like $30 for the premium, so it was a nice fat premium in there.
Right.
And it's moving down. I'm pretty excited. It moved up a little bit, got a little close, made me nervous. Moved back down. I'm like, I need to hedge this thing off, and I had a lot of premium, so you can't do this if you only get like $10. But I got like $30, and so I went in and I actually decided to go in and buy Russell contracts.
Right.
And so I was able to buy some Russells for literally like $9. And when I did that, what happened was it went back up, but then the Dow stayed in the money. Right. So I made my 30. And then the Russell actually ticked up like in the final couple seconds.
Right.
And expired in the money. And I made $91.
Yeah, that's great. But sometimes the 100% opposite can happen too. You can lose on both.
It's harder though. Like it's the chance that both of those expire in the money or out of the money is so rare. Okay, like because just where they were. It was so on the line. The probability of that happening, even me trying to make it happen, I would never even count on that. Okay, and I wouldn't even really be that worried about it happening against me, so long as I make sure those strikes are equalized. What's more likely to happen is both expire in the money or both expire out of the money. I'm sorry. One expires in the money and one expires out of the money, or one expire on the other side. So what was more likely to happen was it went down, and the Dow was going to make 30, and the Russell was going to lose 9. So I netted 21. Or the indices went up, and the Russell was going to make 91, and the Dow was going to lose 70. Okay?
Right.
So that was what I was expecting to happen. I was expecting one of those to lose and one of those to win. That's the whole point of the hedge. Now, is it possible both could get hit? Well, yeah, but I'd only be $9 worse if both did, right? Because I just added the Russell on, so it wasn't like it was going to be a whole lot worse. But the probability of both indices expiring up and down in those last couple minutes when I'm getting them so aligned, it's pretty small. So, I was luck. I wasn't trying to do that. That was luck that both expired. It would have been unlucky if both would have expired out of the money. It was lucky that both expired in the money. But I expected I expected to lose on one side or the other. I just knew no matter which one lost, so long as the other one won, I'd have been net profitable. That's really how you would hedge on those. That's about the only way you can hedge on those. So you have to really be comfortable with the trade. You don't want to over-risk the trade.
Well, that's fascinating because usually the Russell's been the strongest recently, and you went long on the Russell and short on the Dow. That's
exactly.
a brilliant strategy. In the future, could you talk more about doing the Forex in the same fashion, like binaries? Going long on the strong Forex and short on the weaker Forex. Because it seems like some of the correlations I've tried have not worked right at expiration. Like, for example, if you go long. If you go along the euro, you would expect you can take some of the opposite trades, but it seems like at the expiration they don't move in correlation.
Right. Yeah. You don't really want to plan on total correlation. That the indices, a little bit of correlation at the end. I will tell you, avoid the yen pairs on this strategy. They're way too volatile, like pound yen, Aussie yen, euro yen. I mean, you'll get some really big premium, and it'll seem really far away. The problem is they can jump. Like, I mean, they can really move like 30 or 40 pips, like in a heartbeat. Okay?
Okay, that's a fascinating concept also, because one of the shows, they were talking about how at the very last seconds of the day, the program traders, they go in and they may hit like 50,000 contracts in the last millisecond. I think Steve was doing that show, and how the program traders do that. And my question is, who's on the other side of this trade, and are they in anticipation of Darrell and Richard going in and trying to do premium collection, and are they going to hit this trade the last millisecond of the trade so they don't lose the $30 or the $25? I mean, who's on the other side of this trade?
The other side of the trade can be other traders and can be market makers. So it'll be one or the other. Obviously, a market maker their true goal is not to. They're there to make a market, okay, not to trade directionally. Which means they're going to look at their total book of portfolio, whatever you want to call it, and they want to be delta neutral. They want to have longs and shorts, and they really don't make or lose if the market goes up or down. They want to make the difference between bid and ask spread. Okay.
Yeah, but Darrell, the mathematics on a binary is not delta neutral. Like if you're going long on the Russell for $9, I mean, how is the market maker going to be delta neutral on that trade? I mean, there has to be some other way that he protects. I mean, who pays out on that?
Okay, he pays out on it, but there still is a way to be delta neutral. There is over 1,000 contracts traded on Nadex. Actually, there's like 2,000, I think, a day right now. Nadex is like one of the market makers. I know Nadex is only like 6% of their total volume globally, and they do binaries all over the world. Okay, and so delta neutral doesn't mean delta neutral on a binary. Remember, I said their whole portfolio. Okay, so they have people buying and selling strikes all the way up and down that option chain for the last 2 hours or 21 hours or 5 days, and they know their total delta position. So if it were to expire above this, how would that affect us? If it would expire below this, how would that affect us? They know that whole. I mean, they got the math down. They're not guessing. So and they're looking at the total volume of their book. Sort of think about martingaling almost. You know, I mean, they have them all the way up and all the way down, and they know what their delta neutral is. And their job is to be able to get rid of those trades as fast as possible. And there's a lot more. There's plenty of guys that will come in and buy that binary from you for $9 at the very end. And that's what most traders do. That's why they lose a lot. But they premium donation, and we're premium collection. But and so they'll hand those trades off. Now you may go and you may sell the thing for 18, and whatever, they'll hand it off to somebody else that wants to buy it back for 9. It didn't cost them anything. So because they just basically facilitated the transaction. So they're just connecting the buyer and the seller. So they're only stuck if they have to pay out to you. If they hand it off to that guy and he pays 9. It was his 9, and they have the difference there. And they look at. I mean, this is like a 4-hour workshop on just beginning market maker metrics. But they look at delta neutraling across their entire book of business, which involves usually millions of contracts a day globally.
How many contracts do you usually do? So to collect $500, you said, how many contracts were you working on?
Okay, I'll do that right when we get back from this break. Stay right there, okay?
Okay.
All right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. We got Richard on the line from New York, and we're just talking about premium collection strategies. And you there, Richard?
Yes, I'm here. We were talking about the number of contracts you usually do.
Without recommending, a rule of thumb, okay, would be to like one contract per $1,000 in your account. So, like, not exceeding that number, because you don't want to destroy yourself when you lose, right? So, and you will lose occasionally. It's guaranteed. You can always guarantee that there's going to be a loss. So, you want to be able to, expect that and not get wiped out when it happens. So.
Well, let me ask you, what's the purpose of closing out trading and liquidity the last 2 or 3 minutes? I mean, how does that serve me as an investor?
The market maker is no longer able to accurately price this. They're not trying to serve you as an investor. They can't accurately make a market and get rid of the contracts and balance the book. I mean, that's a market maker. The trading is not closed. The exchange is still open, and trades can still happen, and you can place an order, and another trader can take it. It's just the market maker themselves does not want to basically expose their book past that point. So, I mean, think, if you're that guy, you have no way to statistically balance your book and not trade directionally in those last 2 to 3 minutes. Now, on the spreads, you can, because they're more like just an underlying future forex contract, and they're just going directional. So it's really easy to delta neutral that like to the last second. But a binary, I mean, the thing's going to be 0 or 100 based on one single tick. Actually, it could be on like a tenth of a tick, right? So, because I mean, they'll narrow that thing decimal place past. And there's just no way to balance it out. And so they have no limit. Like, somebody could come in and load in like 5 million contracts and bankrupt them. If they have a couple of minutes, they have time to balance things out. If they don't have a couple of minutes, they don't have time to balance it out. So it's basically the market. The other, you could call them the other trader, but they're a market maker because their goal is to delta neutral, make markets. They're just trying to help make the exchange is facilitating the order between a buyer and a seller. The market maker is trying to make sure there is a buyer or a seller to facilitate between and make that market so they can make a lot of bid-ask spread. Ideally, that's what they want to. They want to make that all day because that's arbitrage. If you can buy from one and sell to the other, if you can buy lower and sell higher, if you can buy at the bid and sell at the ask, that's arb.
Right.
So market maker is trying to accomplish arbitrage. Ultimately,
right.
Buy at the bid, sell at the ask.
Well, isn't there a large percentage of the algorithms? I mean, Nadex, doesn't the computer take the opposite side of our trades?
Well, Nadex has no trades in the opposite side of your trades. Nadex does not trade against you as an exchange. Like the CME doesn't trade against you on the S&P 500 futures. They're just facilitating buyers and sellers.
Okay, that sounds contradictory. You're saying that the market maker needs to neutralize the trade, but at the same, I'm just. Maybe I should email you.
Nadex is the exchange. Okay, they're the exchange.
Right.
They're facilitating buyers and sellers.
Right.
They have nothing to do with bid-ask spread. They make exchange fees. They're not on the other side of the trade at all. The market maker is not Nadex. The market maker is its own company. And so the market maker is the one who has to delta neutral, balance their book. They're trying to make bid-ask spread. The Nadex isn't making bid-ask spread. It's not on the other side of the trade.
Right. Okay. And also, where can I find more information about the changes in terms of the swap that's occurring, I guess, on the 14th? Have you talked about it on recent shows?
I'll bring it up tomorrow, but it really...
It is semantics or...
Show's about to wrap up, but I'll bring it up tomorrow, and I'll go into it, but it doesn't affect you at all. It's just how they have to file stuff constantly. And actually, it's better for you. It actually means your money's even safer. So...
Okay.
But if you'll remind me tomorrow, I will bring it up tomorrow. Okay?
Very, very good. Thank you. Have a good day.
Awesome. You bet. Bye.